throwing these sort of concussion or flash grenades that made these humongous booms that sort of rattled through the cities and echoed in everybody's offices to try and push back a group of disruptive protesters who had set off some fireworks. At least I was told they'd set off some fireworks in the street, and the police were trying to push them back. And as the police set off these really loud grenades, the protesters were throwing some items at the police. At one point, they set some garbage cans on fire. They had set up a mini barricade with newspaper kiosks to sort of block the police, who were in full riot gear. They were spraying pepper spray or some sort of spray that they use onto protesters to try and push them back. All happening less than a 15-minute walk from the White House, just a few blocks away from where this parade is going to take place in a few minutes.
How big was the contingent of protesters that, we saw these images of property destruction compared to the total number of protesters? Was this a small minority that was engaged in this?
Yeah, I'm glad you brought that up, because maybe about half an hour before the protests got more confrontational with police, there was a very peaceful protest going down the street. I'm really bad at estimating sizes, but it was large, sizable, the type that we've seen in other cities, where, people had signs, they were chants, people were in costumes, people had, a macrame puppet. It was a very peaceful, lively, but large-scale protest. Then just a few blocks away from that were these other protesters, and there are protesters here who have sort of, they are looking to cause disruption. They do want to get arrested. They do want to instigate conflicts with police, and those were the protesters just a few blocks away. But once they sort of got into it with the police, a lot of other protesters ran over there and I think sort of joined in with the sort of chanting and with, throwing and then, doing things that were much more disruptive than the peaceful protest just a few blocks away.
And the scenes you're describing there, of course, standing in contrast to what we're seeing right now. This is live at Capitol Hill. President Trump and First Lady Melania, as well as Vice President Mike Pence, reviewing the troops. And, of course, this is before they make their way over to the parade box and watch the parade at 4th and Pennsylvania. We now want to go to Kevin Cirilli, who is on the scene where the protests were taking place. Kevin, what I understand about Washington today is that for most federal workers, it is a holiday, so the streets were fairly empty, except for these protesters who are out and about.
Exactly. I'm here in downtown Washington, D.C., where police have blocked off several blocks as a result of protests. I've spoken with several of the protesters here, and there's quite a diversity of the reasons for why they're out here. Some have criticized Trump's rhetoric on the campaign trail, others raising concerns about his financial assets and lack of transparency. If you take a look right over there, you'll see that some protesters have at one point lit a garbage can on fire, but for the most part, this is a quite peaceful protest. There is a helicopter circling the downtown, and authorities seemingly have control of the situation. Now, there were several reports of pepper spray and a handful of arrests, but we're still waiting for official word coming from the Washington Police Department.
Kevin, how organized were the protests today? I know there's, of course, the big women's march. That's happening tomorrow. That's been organized for a while.
Sorry, it looks like we have some movement.
Oh.
Looks like we have some movement and that police are now moving us. I'll throw it back to you.
All right.
Police are now moving us back.
All right.
Police are now moving us back. You can stay with me. There seemingly, if we take a look right over there, was some type of movement where we saw a dozen or so police officers rushing toward the crowd of protesters, seemingly now under control. But as far as how organized this was, and we'll keep walking this way, as far as how organized these protests were, a lot of it originated on social media. I have to be honest here, this is the type of environment that we have seen on the campaign trail, where outside of the venue of a Trump event, you see these types of protests. A younger crowd, a collegiate crowd, but again, coming from for many, many different reasons.
Coming from different walks of life as well. To what extent have there been protesters from the other side, those who perhaps came to Washington from out of town to take part in the celebration of the inauguration? Was there any pushback between those attendees and the protesters?
Well, I spoke with many of the attendees inside earlier this morning on the Capitol lawn, and what they told me was that in order to get those tickets, they had to actually apply to their lawmakers and congressional lawmakers at their offices. So police have really done a good job here in Washington of keeping the protests separate from the events going on the mall. But again, a crowd of several hundred gathering at this block where we are today, largely peaceful, but as we just saw, at times a tense environment.
All right, Kevin Cirilli on the scene for us in downtown Washington. Shannon Pettypiece joining us from Bloomberg's Washington Bureau. Thank you so much for your coverage of the developments on the streets here.
As the U.S. adjusts to a new administration, our next guest is warning about the dangers of Econ 101 and its impact on the new administration's policies. James Kwok is the author of Economism, and he says pop economics is hurting America. He's with us now from Massachusetts to explain. James, great to have you here. What is economism, and how has it led to damaging policies in this country?
Economism is the belief that the simple supply and demand diagrams that you learn in Economics 101, often in the first few weeks, accurately describe the real world. And because of this belief, because of this worldview, a lot of people and a lot of politicians think that complicated problems can be analyzed and solved simply by applying these basic concepts.
All right, so let's take one of the complicated issues, which is health care. Why, James, is free markets not the answer to achieve President Trump's promise of quality health care to all Americans?
So what markets do well is they allocate goods and services to people based on their ability to pay for them. But the problem with applying that model to health care is that if you are a sick person, if you have a chronic illness that requires expensive treatment, the health insurance company knows that's going to cost you tens of thousands of dollars. The correct market price for a health insurance plan for you is tens of thousands of dollars, which obviously many people cannot afford. So this is actually an area where markets might produce efficient outcomes, but they wouldn't produce outcomes that people will actually think are socially acceptable. That's why both Obama and Trump have said that we need to have universal affordable care. The question is how to get there.
James, stepping back, big picture, of course, there's a lot of anxiety among the sort of business and political elites these days about the rise of populism around the world. We heard a lot of that in Davos just this past week. Nobody seems to really know how to counter it among, everyone has ideas. How does this adherence to what you call economism, how has it contributed to the political discontent that we see?
Well, I think one way to talk about that is looking at international trade. So what economism teaches you, if you remember one thing about international trade from Economics 101, it's that trade makes both parties better off. But what people have forgotten is they've forgotten that within one country, say the United States, there are winners from trade and losers from trade. And even if the gains of the winners outweigh the costs of the losers, there are still people who are made worse off. For 20 years, our political and economic elite refused to talk about that issue. Donald Trump and Bernie Sanders talked about it. I don't agree with Donald Trump on many issues, but that is one where I think he was appealing to people who felt left behind by globalization, by technology, and felt left behind by this economic consensus.
Okay, so if there have always been trade-offs for years, and it was just a matter of previous administrations not acknowledging that and promising too much, saying that it was good for everyone, how can we use free markets, Economics 101, to help us find the prescription to fairer trade for all?
Well, I think what's important to recognize is economism, what I call economism, is not the same as economics. It's not even necessarily all the same as Economics 101. So if you take more economics, and professional economists understand issues to identify how to compensate the losers from trade. So one thing that people have talked about a lot is job retraining programs. Those have some view. Another thing that I think we need to recognize is that we need to have a strong social safety net in order to compensate the people who are made worse off by technological and economic changes. Because one thing about a safety net, and this is something that you also learn in economics, is that when people feel like they have downside risk taken care of, they are more willing to be innovative, to take risks, to start companies and find new jobs.
Let me just interrupt you for a moment here, James, because we have some headlines. Apple is suing Qualcomm over patent royalties in an antitrust case. Now, in this case, Apple claims that Qualcomm is unfairly withholding $1 billion, and it is challenging Qualcomm's patents on a wireless industry standard. And this is a lawsuit that has been filed in federal court in San Diego. If you look at Qualcomm shares, Apple shares at the moment marginally higher by 0.2%. Qualcomm shares, meantime, falling to their session lows. There's that leg lower, erasing their earlier gains, now down by 0.1% at 64.35. Apple saying Qualcomm has overcharged it by billions of dollars.
Yeah, we see Qualcomm shares there down modestly, actually a little bit of a pickup of sell-off. It had been down just 0.1%. But now you see the sell-off gathering a little bit of steam, down 0.2%. On this news, Apple suing Qualcomm over patent royalties in an antitrust case. We're back with James Kwok. He's the author of a new book on economism. We talked about some of the different ways the very simplistic ideas in economics, 101-ness, can sort of lead to bad policies. We talked about trade and how it's unlikely to create a healthcare system that people actually like. What's another area where really simplistic stories that people tell about how economics and supply and demand work lead to bad policy and unhappy people?
Well, I think one of the most clear examples in recent memory is the financial crisis. So the financial crisis was preceded by about 2 to 3 decades of essentially a bipartisan belief that if you deregulated the financial markets, not only would you generate prosperity, but that market forces would ensure that the financial system was stable. So Alan Greenspan, for example, said remarkably that fraud wouldn't be a problem because market forces would deter fraud. And we saw what happened in the financial crisis when we had unrestrained financial institutions and limited regulatory oversight. Obviously, the Dodd-Frank Act was an attempt, an imperfect attempt, I believe, but an attempt to impose new constraints on the financial sector and protect the financial system. One thing we know is that Donald Trump and the congressional Republicans are likely to try to roll back much of Dodd-Frank, essentially on the same principle, that being that deregulation is good for the economy.
All right. Thank you very much, James Kwok. He's an author of the new book, Economism, and he's a professor of law at the University of Connecticut. James, thank you very much for coming on.
Meantime, we are keeping an eye on the developments in Washington. This is Pennsylvania Avenue, and the presidential motorcade making its way to the parade box at 4th and Pennsylvania, where President Trump and Vice President Mike Pence and their families will emerge from their cars and watch the parade from their parade box. They had just finished reviewing the troops at Capitol Hill. From New York, this is Bloomberg.
This has been the privilege of my life, and I know I speak for Michelle as well. We look forward to continuing this journey with all of you, and I can't wait to see what you do next.
That was former President Obama earlier today at Joint Base Andrews, and in Davos, Bloomberg caught up with the former Obama economic advisor and former Treasury Secretary Larry Summers. They asked him about the biggest risks under the Trump administration.
Biggest risks actually are probably not in the economics area. Biggest risks are geopolitical, with huge provocation vis-a-vis China, with a kind of unprecedented equating of our NATO allies with the Soviet Union, with challenges to something that's been a centerpiece of American foreign policy, support for European unity, and with unpredictability vis-a-vis the volatile Middle East. So I think there are big risks in that area. I think there are big risks in terms of the approach that's being taken to American democracy, the extent to which our new president is engaged in demonization of particular groups like Muslims within the United States, the extent to which he has called into question the traditional rule of law with ad hoc approaches to making demands of individual companies. All of that is, I think, a cause for concern, and certainly in the economic area, it's very hard to know. My judgment has been that the current wave of optimism is something of a sugar high, and that before long, the consequences of the strong dollar, of substantial policy uncertainty, will be felt in markets and economic growth.
Larry,
but that's a judgment.
I keep on being told he's a businessman. A businessman does not want a trade war unless it's a negotiating tactic.
I've been very troubled by the attitude of business people from the United States here in Davos. People who 2-3 months ago were saying he was a man they would never do business with are today hailing him as a great economic statesman.
I would continue, Professor, but he's 100% right. It has been stunning, the turnaround of American executives.
The people who were terribly afraid of what this would mean for America's place in the world are now hailing those who surround hail those around Donald Trump as great geniuses. You know, every time you look at some kind of moral disaster, whether it's bullying on a playground, whether it's what happened at Enron, whether it's Europe in the 1930s, the key to it is not that there were people who did wrong, that there will always be. The key to it is that good people went along and didn't get in the way. And I see a very disturbing tendency to enable whatever the instinct of this new administration is. And I think that's something that over time the business community may very much come to regret.
Larry, in the generous time that we have with you this morning, this historic day for America and frankly for the global economic system, I want to take you back to the work of one of your uncles, not Ken Arrow, but Paul Samuelson, who wrote a textbook, Samuelson, 1948. It was iconic. It changed the world, I would suggest. If you handed Samuelson 48 to the President of the United States tomorrow, which chapter should he read? What does Mr. Trump need to bone up on from Paul Samuelson?
I don't think Mr. Trump's problems are what he doesn't know. It's the things he knows that aren't so.
Give us one idea there that
it's the mistakes.
When you talk about economic,
it's the conviction that mercantilist protectionist economics somehow drives prosperity, which I think almost all economists would agree is a confusion. It's the belief that somehow you can base a capitalist system not on rules but on individual ad hoc deals, I think that's another substantial
Larry, what will
mistake.
be the ramifications of a neo-mercantilism, this narrowness that we hear from Secretary Wilbur Ross, we hear it from Peter Navarro, we hear it from the president? What will be the outcome for the diehard Trump supporters that were at the Lincoln Memorial yesterday and will be at Capitol Hill at 12 noon?
Ultimately, their incomes are going to be lower because they're going to be paying much higher prices for the products they buy. Ultimately, they're going to be poorer because of a cycle of protection that's going to weaken the global economy. And ultimately, the consequences of all of this, once it works through exchange rates, is going to be exactly the opposite of what's hoped. I mean, think about Mexico. Yes, he had a conversation with the CEO and a few hundred jobs perhaps got preserved for some interval. At the same time, the Mexican peso is down 15%, and that means that for anyone considering locating business in Mexico or Ohio, Mexico now has a new 15% cost advantage.
But so
I think it's all going to be very counterproductive.
That was former U.S. Treasury Secretary Larry Summers earlier today from Davos.
And, of course, on this Inauguration Day, we're keeping an eye on the developments in Washington. There is a route along the parade, and, of course, lots of bystanders there waiting for President Trump and Vice President Mike Pence to appear. There they are in their motorcade, making their way over to the parade box.
Yeah, earlier we saw some shots of Ben Carson walking down the street during that Summers interview, but I'll keep an eye on this parade.
This is Bloomberg. I'm Scarlet on this Inauguration Day. What'd you miss? Well, equity, volatility, and political risk are diverging. Come inside the Bloomberg here, and you can find the function using, you can find the chart using the function at the bottom of the screen. So the blue line is the U.S. Economic Policy Uncertainty Index. The white line is the VIX for equities. And in the past, you can see both of them track pretty closely. But for the Economic Policy Uncertainty Index, the blue line, it is now at about 170-something. Of course, in November, it peaked above 250. The average over this time was 142, so it's up 19%.
Really elevated.
Meantime, the VIX has come down. It's at about 2.5-year low, trading way below its average of 20. So what's going to give?
Yeah, I'm always kind of skeptical of these indices because they're based on keywords of policy from newspapers. But the fact that they've tracked pretty well makes the divergence pretty interesting. Here's a chart I'll be looking at for a while. It is the ratio of the Dow Jones to the S&P 500. And I've color coordinated this chart so that the blue lines are when it's a Democratic administration, the reds are when it's a Republican. And typically the Dow outperforms the S&P during Republican administration and underperforms during Democrats. That's how it's been in recent ones. Already the Dow has, of course, outperformed since the election. So under Trump, we might be seeing that. But, it makes sense. Trump is a populist. The Dow is the people's index that everyone knows. So maybe he'll make the Dow great again.
So 30 stocks do better than 500.
A lot of banks, industrials, stuff like that.
All right, the market closes next. Take a look at where we stand before the close. In the meantime, of course, we're awaiting President Trump and Vice President Mike Pence making their way to the parade box for the inaugural parade. This is Pennsylvania Avenue. This is Bloomberg. You're looking there at a live shot of the parade route in Washington. Of course, the inaugural parade has begun in downtown Washington, and the president is making his way over in his motorcade. I was funny. I was just about to call him the president-elect and have to get ready about this new regime. We'll obviously be continuing to monitor this. All right. Meantime, you can see there stock markets closing, gaining, but off their highs of the session. Investors shifting a bit into haven assets after Donald Trump was sworn in as the nation's 45th president. Treasuries rising, gold also rising as well, following a pretty fiery inauguration speech that promised to upend the political establishment. I'm Scarlet Fu. And I'm Joe Weisenthal. And if you're tuning in live on Twitter, we want to welcome you to our closing bell coverage that's every weekday from 4 to 5 p.m. Eastern. We begin with our market minutes today. As we mentioned, stocks rising, but coming off their best levels of the session. So gaining, but not quite with the same bang that they had started with. Very similar action to what we saw pre-inauguration. Anyone hoping that this would break us out of a range one way or another still hasn't happened yet. Maybe we'll see once next week starts and Trump starts taking actual actions. They were disappointed if that was the case. In terms of sector groups, let's take a look. Come inside the Bloomberg here, and you have 9 out of 11 groups rising. Materials and telecom, Dow names up by almost 0.9%. Industrials and healthcare leading the way down. I was taking a look at the individual movers here, especially within the healthcare index. The big loser here for the S&P 500 was Bristol Myers. It was actually the worst performer in the S&P 500. Bristol Myers falling behind Merck in its race to treat lung cancer, and said that it will not seek accelerated approval to combine two existing drugs. So that's certainly something that we're keeping an eye on. Cowen downgraded Bristol Myers on the news. You can see it closing down 11%. Merck gaining. AstraZeneca I just included because that's London trading. It's also testing lung cancer treatment, so a competitor there in that realm.
And let's look at government bond markets today, starting with U.S. 2-year and 10-year yields. 10-year ending up down a little bit. It was closer to 2.50 earlier. Still well off the lows of earlier this week. 2-year yield down a bit. There was no real major data or anything like that. But check out the German 10-year yield. Continues to march higher at its highest in a long time. The era of negative rates going farther and farther back into the rearview mirror there.
All right. In terms of currencies, the dollar gave up some earlier gains. If you look at the Bloomberg dollar index on an intraday basis, I suppose it's suitable for a president who favors a weaker currency. In terms of individual pairs, the dollar is losing ground mainly to the Mexican peso and to a lesser extent the Brazilian real and the Korean won. Traders talk about fairly thin trading conditions today. The British pound, another major currency I'm keeping an eye on, took a big tumble. There's the leg lower shortly before 5 a.m. New York time. That's after disappointing UK retail sales came in for the month of December. It showed the fastest decline in almost 5 years, but the pound made a bit of a recovery at the end of trading.
And finally, a look at commodities, just looking at gold and oil here. Gold having a fairly solid day. It was down for a while in the afternoon. Then it started picking up. It seemed like it was kind of at the same time some of those protest images were happening, but I wouldn't want to read too much into that because who knows? And plus, it's not a huge move. Oil having a slightly bigger move, gaining 2% today on news. Saudi Arabia saying that OPEC members are doing well on those output cuts. But, you know, gold, just like or oil, just like everything else, has been in the range. I feel like every time we look at it, it's around 52.
It pretty much is. Those are today's market minutes. What'd you miss? For more on the market reaction to this historic day is Elsa Linios. She's head of North American G10 FX strategy at RBC Capital Markets. And Mike McKee, Bloomberg's international economics and policy correspondent. Mike, let's start with you there on Capitol Hill. President Trump painting a fairly dystopian view of the economy that he is promising to fix. In his inaugural speech, he used the word carnage. It's a pretty dark vision. And obviously this rings true with a big part of the American public, and it was very effective during the campaign. He's in office now, though, so he has to come up with a prescription.
He does. He's in charge now, and he's got to translate his rhetoric into reality. He's going to start, we understand, next week with a series of executive orders, some of them relatively easy to do. He's going to withdraw from the Trans-Pacific Partnership, but that was all but dead on Capitol Hill anyway. He's going to talk to the Mexicans and Canadians about renegotiating NAFTA. Now, that's interesting because it is not canceling NAFTA, as he once suggested. It's renegotiating, and some of the things that he has talked about, or his people have talked about, are things that could relatively easily be incorporated into a new version of the treaty. By the way, we're hearing the Mexican president is going to make an address about Donald Trump in the United States on Monday as well. But the harder stuff is going to take longer. Repealing Obamacare, getting some sort of tax package through Congress, and changing immigration laws. That's going to take a while, and that's where the rubber is going to meet the road for Donald Trump, whether he can actually deliver on the promises he's now making.
Elsa, there have been a lot of post-election moves that seem to be premised on changes in policy, tax policy, trade policy, regulatory policy. How soon do these have to move before traders start getting disappointed and really reversing these?
So it's interesting because the big leg for the dollar actually came in November. It was really driven by rate expectations more than anything else. Since December, we've actually been trading sideways. There's not an awful lot in the price if you think about, potential corporate tax reform. We've heard about border-adjusted tax break on overseas earnings. I think there's still a lot of that to be priced in.
And, I just want to pull up something here on the Bloomberg because you bring up an interesting point that Joe has mentioned as well. The dollar actually one of the worst performing currencies, major currencies so far this year. Come inside the Bloomberg. This is WCRS Go. The dollar performing only better than the Mexican peso, which is not saying a whole lot. And up until recently, performing better than the British pound, although that has turned around as well. Do we presume that this is just a reversal of what we had seen in November, or is this kind of the standard now as we await more details?
So positioning is clearly very crowded in the dollar, and it's not just FX investors or kind of traditional macro investors. We've heard from a lot of investors outside of FX, also positioning in the dollar as part of this Trump inflation trade or reflation trade. And I think that's caught a lot of people out. They may have gotten a little bit too late at the highs in December, and we've seen a lot of very sharp unwinds in the dollar in January. I think going forward, we'll be much more focused on what policies the new administration is actually going to introduce, and their corporate tax reform will be absolutely critical.
Mike McKee, you mentioned earlier Trump plans to withdraw from the TPP and renegotiate NAFTA. Do we have any idea specifically what he would like to get changed? What are his goals in those discussions?
Well, Wilbur Ross, the incoming Commerce Secretary, said in his confirmation hearings that what they would like to do is renegotiate within NAFTA the rules on origin, content origin. That means if Japanese TV set makers bring a bunch of parts into Mexico, assemble them there because they have a free trade agreement with Japan, and then export them into the United States, they get to be tariff-free, and Trump doesn't think that's the right thing to do. Other people would agree that that is something they could renegotiate. And he's also worried about the investor protection clauses, where if government expropriates your property or materially changes the rules under which you operate, then a company can sue a country. Doesn't really happen to the United States much. It was actually kind of put into these deals to make sure that the United States wasn't taken advantage of by developing third world countries. So that's something that maybe they could negotiate as well. Tariffs, a totally different story. Donald Trump would like to see the Mexicans improve their wage standards, their hour standards, allow unions. Those are things that the Mexicans are moving towards. So there's a lot of common ground they can talk about, but tariffs is going to be maybe one of the sticking points if he wants to reimpose any of those.
And one thing President Trump has mentioned, of course, is his intention to name China as a currency manipulator. Elsa, will that have an impact on the markets at all, you think?
Well, the problem is he's about 3 to 5 years too late with his comments on China. And if you think about what China's doing at the moment, it's actually something, we've discussed many times before. China's trying to prevent its currency from weakening rather than trying to strengthen it. The incoming Treasury Secretary in his nomination hearing did say that, it's not entirely clear whether China does satisfy those restrictions at the moment. So, I think we'll hear a bit more softness on the Chinese currency, but maybe a harder tone on Chinese trade.
Elsa, you mentioned that investors really want to see the corporate tax reform. But within the corporate tax reform debate, there are a lot of issues that play directly to FX and currency translations, particularly around the border adjustment tax and the belief that that could be strong for the dollar. How do you play that, or how should traders be thinking about that, and who's most vulnerable to it?
Well, I think one thing that was very interesting about the address today is that so far we've heard a lot of talk about Mexico, about China. Today's speech was really America first. It wasn't discriminating. It wasn't saying, versus Mexico versus China. And that's when you have to look at Canada. It's one of the U.S.'s largest trading partners, so far not been mentioned by name. But if we do get this border-adjusted tax, potentially hugely negative for the Canadian dollar.
All right, Elsa Linos, thank you so much. You're going to stay with us because we've got more to discuss, particularly on the loonie and the Mexican peso. Mike McKee, Bloomberg's international economics and policy correspondent, we appreciate your time. We have some breaking news here on James Gorman, the Morgan Stanley CEO. According to an email from Morgan Stanley's spokesman, the firm has lifted James Gorman's pay by 7.1% for the year of 2016 to $22.5 million. And as part of that compensation, Morgan Stanley has awarded restricted stock units as well. That was 117,292.85 restricted stock units.
And of course, we've been getting CEO pay updates from across the banks. Yesterday, we got Jamie Dimon, who got a 3.7% pay hike to $28 million. So Gorman's, although not getting paid quite as much, did get a better hike, 7.1% raise to $22.5 million for the Morgan Stanley chairman and CEO.
From New York, this is Bloomberg. this Inauguration Day is an offset to the pageantry and the ceremony here on Pennsylvania Avenue, where we've seen more than 1,000 protesters gathered in downtown Washington. They're protesting against President Donald Trump's inauguration, with some throwing bricks and concrete at police. We've seen police respond with pepper spray, and more than 90 arrests have been made. Joining us now from the area of the protest is Bloomberg's Kevin Cirilli. So, Kevin, as the parade takes place right now, has the action changed at all? We did see more violence earlier, but it seems to have calmed down of late, yes?
Yeah, there's only a couple hundred protests here in downtown Washington in what is known as Franklin Square. A handful of protesters have lit trash cans on fire, and there's one vehicle that they smashed the windows on. But, you know, to put it in context for you, I covered Trump on the campaign trail all throughout the country for the past 2 years. And when you look at cities, whether it's Chicago or New Orleans or San Jose, this really pales in comparison to some of the more larger, wider spread protests that we've seen. Now, that said, this is a very divided country right now, and a lot of the protesters that I am speaking with raised a variety of issues for what.
Kevin, one second. I'm just going to interrupt you for a second. We have footage. Donald Trump has stepped out of his car walking down the parade route. We saw them with First Lady Melania Trump. We saw, I think there's Barron Trump right there in the picture, Donald Trump's son. Obviously, you hear the loud applause, so don't get the impression it's only protesters there. Obviously, a lot of supporters there as well, but you can see the footage walking directly down the route.
And there's Capitol Hill, or I should say the U.S. Capitol building in the background there. Kevin, you were saying, though, that in contrast to what you've seen on the campaign trail, the protests that we've seen today are fairly tame.
Fairly tame, and again, the people who are here attending the inauguration far outnumber the protesters. But again, this is a very divided country right now. I can tell you that I interviewed people earlier this morning who have come out from all across the country to attend the inauguration and to partake in this parade that you're watching unfold here, of course. Now, the weather did deter some people from attending the rally, and the attendance compared with President Obama is somewhat down. But again, the police arresting more than 90 people, but with more than thousands here, not a lot, and certainly not a lot of violence at all by any means here in Washington, D.C.
And Kevin, we can hear the helicopters buzzing above you, of course. There's thick security in downtown Washington as we see President Trump and the First Lady walk along the parade route on Pennsylvania Avenue. In talking to the protesters, will they be out in force this weekend as well? Because there's a big women's march this weekend.
So that, I think, is perhaps the more coordinated and organized protest effort, is that starting tomorrow morning, thousands of women from all across the country are supposedly organizing a protest for women's advocacy issues. And that will again start at the Capitol and head down the Capitol Mall along where the inauguration was taking place today. And so again, I think just when you look at the type of people who are out here protesting against Trump, it's for a variety of issues, whether it's Black Lives Matter, you have people who are younger, the collegiate age, and then you also have people who are here protesting out of concern for women's health and women's advocacy issues. Right. A large march expected for tomorrow, and organizers heavily organizing for that.
Bloomberg's Kevin Cirilli on the scene for us in downtown Washington. Thank you so much.
All right, I want to bring back Elsa Lino's head of North American G10 FX strategy at RBC Capital Markets. In the last segment, we talked about some of the surprise ramifications. You know, everyone's focused on Mexico. Maybe people should be focusing on Canada more as NAFTA potentially gets renegotiated. Tell us more about why you think people are underestimating some of the Canada risk here.
So the NAFTA risk is probably not going to be so great for Canada in that, like you said earlier, Donald Trump is not looking to rip up NAFTA as he'd promised on the campaign trail. He's really looking for more modest changes. So where Canada stands to lose a lot more is with corporate tax reform. There's a proposal from the House that includes a border-adjusted tax. That's not Trump's proposal, but he has said he's open to discussing it over the coming months. If something like that were to be implemented, it could potentially be extremely negative for the Canadian dollar.
Meantime, for the Mexican peso, we've seen the devaluation there take place for a while now in the lead up to the election of Donald Trump. At some point, that should benefit the economy, shouldn't it?
Exactly. So right now, the domestic economy is facing its own problems. You know, you had this gasolinazo hike in gas prices at the start of the year. Rates are above neutral, but the central bank cannot cut to support the economy because of the currency. Inflation is ticking higher. At the same time, you have had a big move in the Mexican peso over the last year, and that is, like you say, at some point going to be helping Mexican exports.
There's this view out there put forward by economists that a border adjustment tax wouldn't be particularly negative because what happens is the dollar would just strengthen, and so the ultimate cost of importing wouldn't actually change. But you're skeptical of that.
Exactly. So standard economic theory says the dollar would be a perfect offset. You know, if you introduce the border adjusted tax, the dollar would go up to entirely offset the impact. If you actually look at the data, you look empirically at what happens in currency markets, that's not the way currency markets work. You know, to start with, if you did get a 20-25% rally in the dollar, you'd have huge collateral damage from emerging markets to commodity prices and so on. At the same time, it's not going to be a perfect offset. You know, it will happen via higher inflation, via higher US rates. You know, it's the kind of thing that is going to have an impact on equities and on importers, that's for sure.
So one thing about all the moves that we've seen in currencies this year, it's been in thin trading because start of the year currency trading tends to be kind of thin, at least until the corporate treasurers get on board and start to put on hedges or make their decisions as well. Do we presume that once they get in on the action that the trajectory of what we've seen in, say, the Mexican peso will be continued, or could there be a reversal?
Well, at the moment, there's been a lot of uncertainty. Ahead of the inauguration, people were really waiting to see what the new president would do once he takes office. First 100 days are going to be absolutely critical. We already know some of his priorities. Like you said earlier, we'll have a few executive orders coming this week. But the critical thing will be what does he do on tax and what does he do on protectionist policies?
After we get some of this uncertainty resolved, when the protectionist stuff, we know what he wants to do, taxes, tax reform becomes more clear. Could Mexico benefit, as I think Larry Summers suggested earlier, from the fact that its currency has depreciated so much and by many sort of classical economic models is objectively undervalued?
Right, so that will definitely be a partial offset. And if you look at the Mexican peso versus, for example, the Canadian dollar, it's definitely got a relative advantage because it's depreciated so much already. And one way to play it would be to look for much more depreciation in the Canadian dollar. You know, and there are a number of ways you can do that via options, for example, to kind of see through that risk.
What, if anything, can Mexico, the Central Bank of Mexico, do when it comes to keeping its currency from tumbling further?
Well, what they've tried to do so far is introduce some two-way risk with FX interventions. At the same time, they have been hiking rates. They'll hike again. But it's a bit difficult at the moment because, like I said earlier, rates are above neutral. You know, the domestic economy is not that strong. They're really stuck in a corner. So what they're relying on now is for a clean out of positioning, for some more two-way risk in the market, and for some people to think this has gone too far, it's undervalued, maybe take the other side.
You know, one thing that hasn't even come up in our conversation yet is the Federal Reserve, because it's just such an afterthought these days. But we heard twice from Janet Yellen this week. What is your takeaway from the Fed, what it wants to do, and how does that affect markets?
Well, the Fed is going to try and stick to its mandate, stick to its inflation targeting mandate and, you know, full employment targeting mandate. On the employment side, they're doing really very well. On the inflation side, still a bit more room, but you can tell that the Fed are keen to take rates towards a more normal level. And as that happens, the dollar should benefit. You know, that may be at odds with what Donald Trump wants to do. You've heard him already complaining that the dollar is too strong. But if the Fed is hiking rates, the dollar is going to go up.
All right, El Salinos, head of North American G10 FX strategy at RBC Capital Markets. Thank you very much. And you're looking still at pictures from Trump's inauguration parade. Earlier today, the president reiterated his call to make America great again.
Together, we will make America strong again. We will make America wealthy again. We will make America proud again. We will make America safe again. And yes, together, we will make America great again.
And here's a study in contrast between what's taking place in Washington. On the one hand, you have protests, and there is smoke there. There were some fire trucks there earlier as well, downtown Washington, as protesters came out against the inauguration of Donald Trump.
That smoke that you're seeing on the left-hand side was a limousine that was just on fire, and it was, but the fire department just came and put it out. Very symbolic, obviously, setting a limousine on fire.
And speaking of limousines.
And speaking of limousines, on the right side, you can continue to see the parade that's going on.
The parade, and of course, that's a presidential motorcade. The president and the first lady have emerged from there, and they are now walking along the parade route, waving to their supporters, watching the parade, and taking part in the festivities.
Still important to note, we talked to the Bloomberg reporters down there. The violent protesters are a minority of the protesters, so it's not most of them. Nonetheless, some pretty striking images coming out of the protest today in D.C.
And of course, it's all lead up to the big organized march tomorrow with the Women in Washington march that will be taking place.
Exactly. It'll be really interesting to see how that goes.
All right, what'd you miss? Let's take a deep dive into the Bloomberg. You can find all the following charts using the function at the bottom of the screen. We want to focus on China because they reported GDP numbers. And it looks like when it comes to China, it's deflation no more. China moved further out of a falling price environment in the fourth quarter. So the white line is what I'm paying attention to here. That's a GDP deflator. It measures the level of prices of all new domestically produced goods and services in the economy. And in the fourth quarter, it rose more than 3%, 3.1% year on year. And that's up from 1.1% in the third quarter. You have other lines here. The blue line is real GDP, 6.8% is the latest read, and nominal GDP, 9.9%. Commodity prices are a big part of the picture, with iron ore and oil prices rising. Higher inflation, obviously, is good when you talk about China's debt.
Right. Very good point. And as you see, just like everywhere else, inflation on the rise, so nominal GDP really picking up in China. I want to talk more about real GDP. As Scarlet mentioned, 6.8%. If we go into the terminal, that is the blue line there. You notice something about the blue line? It's very smooth. Yeah.
Is it manufactured?
It's very smooth. And so, of course, people are always a little skeptical about it. But it doesn't mean it's necessarily overstated. If you compare the blue line with the Li Keqiang index, which is an index that was created to try to measure real economy things like rail shipments, electricity consumption, bank loans, things like that would be sort of hard to fudge, hard data. That is actually significantly higher than the official numbers right now.
That's 10.9% at
nearly
November.
11%. So this is clearly much noisier. It's not necessarily more right or anything like that. But perhaps, if anything, the slight acceleration we saw in official GDP is perhaps a bit understated.
Well, we'll continue to look for that. And that's not the first time that someone has said that as well.
Yeah, no, I mean, you see it even on the chart.
All right. Meantime, again, we're looking at live pictures here in Washington, Pennsylvania Avenue. The president, the first lady, the vice president, all of them en route as they watch the parade. And, of course, the bystanders, the supporters there. A few blocks away, of course, you'd have protests as well. From New York, this is Bloomberg.
Every decision on trade, on taxes, on immigration, on foreign affairs will be made to benefit American workers and American families. We must protect our borders from the ravages of other countries making our products, stealing our companies, and destroying our jobs.
That was President Trump in his inaugural speech, and now we see him once again walking the inaugural parade. There he is with his wife, Melania. There he is. There's Barron, too, in the picture. We also see another one of his sons holding up his daughter in the background.
Oh, right.
They were out of the car for a while. I think they got back in the car. Now they're back out. There's Ivanka on the right side. So the whole family walking the parade route right now.
And, of course, security is a major concern because a few blocks away from the parade route, you have protesters in the streets. They've been there for hours. There were police clashes.
Right. From these shots, it looks totally calm. But then you look at the other shots, like what we're showing you right here. You can still see the smoke. There was a limousine that was on fire. Actually, right in the back, you can see the burnt-out limousine right there and the firefighters who are still doing something, putting it out. So quite a contrast with the parade route, very sort of normal looking. There you go. And then the protest, which obviously got violent.
About 95 people arrested, according to Metropolitan Police, as of early this afternoon.
What'd you miss? The Mexican peso was the best performer among major currencies today as Donald Trump became the 45th president of the United States. The currency rallied while the new commander-in-chief spoke on the steps of the Capitol in Washington. For more on Mexico and other emerging markets, let's bring in Amr Bisat, co-portfolio manager of the BlackRock Strategic Global Bond Fund. Amr, thank you very much for joining us. So Donald Trump, in his speech, real America first. We're going to take back the jobs that the other countries stole for us. It was full-on populist, nationalist rhetoric. It was, not some attempt to sort of pivot or anything like that. So what does that mean, big picture, for the countries you cover? Can he really reverse the tide of globalization?
Listen, the narrative that he is suggesting right now is a very clear one. It's a very economic nationalist one. It's one where all the incentives, all the policies are going to be based on what is in the best interest of the U.S. in a very parochial sense, in a very inward-looking sense. That's not good for emerging markets, right? Any set of countries that benefit from importing capital and exporting goods to the developed world is going to be hurt by that kind of... and we're already seeing it. This is a trend that is not new. Globalization has reversed for more than 5 or 6 or 7 years right now. The question as a portfolio manager has to ask yourself is this in the price? Is this already at the point where we've adjusted to that? And it feels at this point that at least in Mexico, the market is starting to think that perhaps, partly because of the cheapness of the asset prices, particularly the peso, partly because of the shift in the discussion on Mexico away from tweets and noisy rhetoric towards a more formal discussion on NAFTA, a formal discussion on renegotiating trade relations. Perhaps now we're going to enter into a more formal, less noisy discussion, and that market is starting to think and take the other side of this.
And we also know that Mexico's leader will be speaking as well to discuss how his country is going to approach the U.S., presumably on these NAFTA renegotiations. Given all that, what should Mexico focus on here? Because there are things that it can control versus things that it can't control.
No, absolutely. I mean, there's a number of things that they can do. The first is make sure that the negotiations are done in a formal, institutional, let's be clear, boring way. Now, these are very detailed conversations. I mean, I remember the negotiations over NAFTA itself in the late 80s, early 90s. These were not sexy discussions. These were very... So the first thing we do is we take them back to the technical, away from the noisy rhetoric.
Away from the tweets.
Well, yes. The second thing you need to do is don't look at it as a U.S. versus Mexico. Make it more of a multilateral. In particular, bring in Canada into this conversation. Make the negotiations not just about Mexico versus the U.S. Make it about a more broader form of negotiations. And to their credit, they're doing both of these things, by the way.
Do you see evidence of Canada and Mexico working together in that way, then?
Well, clearly the discussions are going. Clearly they're being called to enter into that conversation as well. Clearly, the appointment of the former foreign finance minister as foreign minister in charge of the negotiations, who's somebody who's very internationalist in his attitude and his scope, is something that is positively seen.
So Trump, if for no other reasons besides political reasons, needs to get something that he can point to and say, I got to win on the NAFTA renegotiations. Does, in your mind, a deal exist out there that would give him, some sort of political victory while not being particularly economically destabilizing?
No, all economic decisions at the end of the day are economic trade-offs. Well, there are trade-offs. Somebody's going to win, somebody's going to lose. And what is the price at which these things get settled? And yes, there are ways in which we can rediscuss the concept of NAFTA is a 20-year-old agreement. It can be rethought through, right, in terms of the relationship on the truckers, the relationship on the reciprocity, the third country advantages that Mexico has. All of these things are legitimate reasons that need to be rediscussed and rethought through, and an equilibrium can be obtained. And I think this is where we are entering. I think this is hopefully the best case is that we enter into that kind of conversation.
And you could argue that it's time for it after 20 years. The world has changed a lot in 20 years. I wonder, though, as we look at the globalization of capital markets, companies in emerging markets have been selling a lot of debt in U.S. dollars and in euros. Do they continue doing that with Donald Trump threatening to rip up trade agreements and renegotiate them left and right? Where does that leave them if they are in need of funds?
If the last few days is an indicator, it tells you that nobody's worried about this. We had $48 billion worth of new emerging market bonds that got issued in the last 2 weeks. This is a number that is, if it's not a record, it's one of the closest to the records. It doesn't feel yet that people are taking on a complete reversal of the financial globalization.
So, yeah, I mean, at the beginning of our conversation, you say, of course, Trumpian policy is not good for EM, but is the price in there? And perhaps it is for Mexico. But would you say elsewhere around the world, the risks associated with Trump policies aren't being reflected yet?
No, but I think, listen, there's one fact that we haven't discussed yet, but that's crucial, right? We can always focus on the uncertainty on policies and the Trump policies. We can focus on, incidentally, the higher interest rates and the stronger dollar. That seems to be a corollary of the Trump presidency, which is also not good for emerging markets, on the one hand. On the other hand, you can focus on something completely different, which is the global economy is doing very well. Right? Growth is picking up. The inflationary policies that we seem to be experiencing right now is something that, at the end of the day, matters a lot for emerging markets. As of today, I'm willing to think that the latter, higher growth, is going to trump. No pun intended here.
We're going to have a lot of that.
Yeah, we're going to have a lot of that, exactly. It's going to offset the negative impact of uncertainty and stronger dollar.
All right, Amr Bissad of BlackRock, thank you very much. Always a pleasure to have you on.
Thank you very much.
All right, as you can see, Donald Trump is walking the inaugural parade with his wife, the First Lady, and, of course, waving to the crowds throughout various portions of this parade. They have been going into the motorcade, into the limousine, and coming back out. Right now, he is out and walking the parade and waving to his supporters. In the meantime, the U.S. Senate is back in session with statements and debate occurring. Chuck Schumer, the Senate Democratic leader, had been talking. You're looking there at John McCain, of course, Republican. Schumer had said that Trump's action makes it harder to get mortgages. He also says that actions speak louder than words on mortgage action, and that they expect to vote this evening on Kelly and Mattis. So,
yeah, getting straight to work, votes on confirmation. As you mentioned, the Trump administration getting to work right away on that move on housing. So the new administration begins. This is Bloomberg.
President Donald Trump has gone back into his limousine. This is, of course, the inaugural parade. And, of course, it has been taking place over the last 20, 30 minutes. He's come out several times to wave to his supporters and to cheer with them on his inauguration day. In the meantime, more than 1,000 protesters gathered a few blocks away in downtown Washington. They are protesting against Donald Trump's inauguration. Some threw bricks and concrete at the police. Police responded with what's called concussion grenades and pepper spray. There have been more than 90 arrests. Some say about 100 arrests were made this afternoon. Joining us from the area of the protest is Bloomberg's Kevin Cirilli. So, Kevin, has the protest mainly been concentrated in that 1 or 2 block area that you're at, a few blocks north of the parade route?
Yes, I'm standing here in Franklin Square, which is located along K Street in the heart of downtown Washington, the business district, if you will. There were a crowd of several hundred protesters are gathered behind me. Now, what was somewhat peaceful has now turned to a fiery incident where a handful of protesters set a car on fire. That led to a bevy of smoke flooding the area, and police and authorities used what are known as flash bangers to disperse the crowd. They make a large boom sound, and the crowd of several hundred folks running at some point in different directions. Now, there's also been a police helicopter circulating the area and the perimeter, and there was supposed to be some music playing. Now, that started and stopped, but a fiery couple of minutes and half hour here in Franklin Square.
Kevin, I remember reading some stuff about supporters of Trump wanting to come in and counter the protesters, perhaps some of the bikers. Has there been any sort of aggressive or visible counter-protest as the protesters have thrown bricks or set cars on fire?
So aside from, again, what seemingly are isolated incidents, there hasn't been flare-ups between Trump supporters and Trump protesters. Now, of course, there are isolated incidents, but so far, no violence. I can tell you that just in the last half hour, I've seen more than a dozen police vehicles move into Franklin Square and descend upon the area. A heavy police force presence in this area where I am, again, as a result of a handful of protesters lighting that car on fire. But, police utilizing pepper spray, utilizing flashbangers to disperse the crowds, ambulances in and out of the area. And quite some fiery instances, to say the least.
What are you hearing from the protesters in terms of their plans for this evening? There's a bunch of inaugural balls for people to attend, including the president. And, of course, there's another big protest scheduled for tomorrow by women on Washington.
So, obviously, I've reached out to law enforcement, the Washington Police Department. They have said publicly that they are prepared for tonight. There are heavy road closures inside the Beltway and in Washington, so police look for a heavy police presence out tonight.
Kevin, and then what's tomorrow? When do things get really started tomorrow? What's the schedule of events?
Tomorrow, I would anticipate there to be I think we're going to have to throw it back to you right now.
All right, thank you very much. Bloomberg's Kevin Cirilli.
Coming up next, Donald Trump has made a lot of promises the past couple of years. We're going to break down which ones he's most likely to keep next.
We will build new roads and highways and bridges and airports and tunnels and railways all across our wonderful nation. We will get our people off of welfare and back to work, rebuilding our country with American hands and American labor.
Vice President Mike Pence waving to the crowd, the supporters en route or during the inaugural
during the parade.
Yeah, I keep saying en route because it's for a while they couldn't get their way over. They couldn't make their way over. There was so much traffic. But here he is now waving, and of course he and his wife. President Trump was also walking along. He would go back into the vehicle every once in a while, but he's there with the entire family as they greet their supporters. What'd you miss? Donald Trump is president, and he now has to fulfill his promise to make America great again. How will we know when he's doing it? How will we know when he's done it? Joining us now with a few metrics to keep an eye on is Bloomberg Intelligence chief U.S. economist Carl Riccadonna. I guess we should start with factory jobs, Carl, because one of his big points is about how jobs are leaving the United States and going overseas, and he's pressured several companies to change their plans. So factory jobs should be on the up and up?
Right. So that was a major theme of the campaign. We saw it in the inaugural address. I think maybe that was the start of his 2020 re-election campaign as well. The path to him returning to the White House in 4 years requires strong support in the Rust Belt states. He needs to be carrying Pennsylvania, Ohio, Michigan, Wisconsin, etc. And so he has to deliver something for the factory sector in terms of not only job creation, but of course that's an important part, but just general activity. So if the dollar continues on the same path that it's been, appreciating about 4% since Election Day, 25% over the last 2 years, this is going to be a real problem for exporters and for the manufacturing sector. Mind you, when we think about currencies, we often just think about exports, but there are significant inroads into the domestic economy as well. So U.S. workers, especially at manufacturers, become more expensive when the dollar strengthens. Also, a lot of domestic producers who don't normally think about currency policy do suddenly think about currency policy when they're faced with a flood of cheap imports squeezing their profit margins.
You know, thinking about Donald Trump's economic challenge, what strikes me is we're in a good place cyclically already.
Yes.
I mean, unemployment is down to 4.7%. By most accounts, the economy is strong by the measures that we look at on a high-frequency basis. Trump's real challenge is the structural side now. He really has to change the economy, whether it's increasing manufacturing, which is less of a cyclical challenge.
Or achieving those GDP targets.
Or increasing labor force participation rate, really these sort of big structural things. What else is there? Talk about his GDP goals, because, again, this is something that's kind of been humming along.
Right. We've been plodding along at really 2% GDP growth for basically 7 years running now, and he's hoping to accelerate that pace to something faster, something the Fed would certainly welcome. But it's yet to be determined if that can happen in an old industrialized economy with an aging workforce and low productivity growth. It's going to be a big challenge. So maybe there's some confidence effect here, and through deregulation and a limbered up banking sector, credit will flow more freely to the economy. So it may be possible. I don't know if we can hit 4% on a sustained basis, but I think we could push above 2%, let's say 2.5% to 3.5% for a good while, and we'll know if that's really happening. So you asked, when can we actually measure whether it's happening? One test will be if we see the Fed's longer run projections for the economy and for economic growth actually starting to move higher.
And, of course, with that, we are looking for paychecks, wage gains to continue to accelerate. They've already been accelerating.
Well, they've been accelerating, but from an extremely low level.
Base, but they have been, and it came before the election as well. So there's already a trajectory in place.
Exactly. The trajectory's in place, and that will be very helpful to him to maybe get some low-hanging fruit, courtesy of Chair Yellen and the Obama administration. But we've gone through full employment in the U.S. economy, and when that happens, you get wage pressures. Now, wage inflation, like all inflation, is a lagging indicator, so it can be slow to arrive, especially if the economy's sluggish. Nonetheless, we're at the point in the cycle. The thing that's different in 2017 compared to the last 7 years is the fact that we finally have removed the slack from the labor market, which gives workers more bargaining power, and wage pressures and wage growth will go a long way to supporting consumer spending, faster GDP growth overall. And back to the point that Joe made, even labor force participation should improve as wages and employment income becomes more enticing.
So you mentioned the slack in the labor market just about gone. Wages are accelerating, though, off of a low base. Can Trump generate economic activity, whether it's in factories or through the infrastructure stimulus, without depriving other resources, like, say, home building, where many people would argue there's still a shortage of homes, of the workers that they need?
Well, we're getting to the point that there's not that many available additional workers, which is going to raise some real interesting questions about how do we relieve shortages in the workforce when there's lots of dialogue about immigration policy and what actually that will entail. If we look at the level of unemployment compared to where we were prior to the Great Recession, it's running about 1 million in headcount above that level. So just the ranks of the unemployed, you have about 1 million more workers. If you look at folks who have dropped out of the labor force but would consider taking a job if conditions improved, again, there's about 1 million of additional slack. And if you look at new entrants to the labor force, that's generally about 1 million per year as well. So if we look at the labor well, if you will, for 2017, there's a pool of about 3 million workers. We've been creating jobs over the past year at a pace of about 2.25 million. So there's enough, but just barely. And of course, there's mismatches there.
I really like that
that's telling you that we're really scraping the bottom of the barrel in terms of labor supply. And that means if you need a worker desperately, you better offer higher wages and poach that worker from the competition.
So
that's good. Some good advice. Poach the worker from the competition.
Of all these different metrics, which is the one that's most likely to pick up first or give us an indication first?
Well, I think what picked up first was an array of sentiment indicators, whether it was household sentiment, market sentiment as measured by stock valuations, home builder sentiment, small business sentiment. We have to see if this translates into real economic activity. Now, with vehicle sales, we saw that. The proof in the pudding will be if the pace of hiring picks up.
All right. Bloomberg Intelligence Chief U.S. Economist Carl Riccadonna, thank you so much.
As we continue our coverage of President Donald Trump's inauguration, coming up, we'll tell you what you need to know for next week. This is Bloomberg.
The inaugural parade continues on Pennsylvania Avenue. There's a nice wide shot of what's proceeding in Washington. Of course, a few blocks away, Joe, protesters.
We saw a limousine lit on fire, but as from this view, you can see the parade looks very stable and like any other presidential parade. Earlier, we saw Mike Pence, Donald Trump, President Donald Trump.
And their families.
And their families walking down the street.
What'd you miss? Well, if you look at equity markets, they had started the day stronger, but they actually kind of lost steam throughout the trading day, ended up modestly higher, but certainly gave up a lot of their advanced healthcare shares among the decliners. Now, in terms of what we're looking at next week, don't miss this. Earnings. A couple of tech giants reporting next week, including Microsoft, Alphabet, the parent of Google, and Intel, all reporting on Thursday.
And I will be looking at the French socialist primary that's going to close at 11 11 a.m. Eastern Sunday. Politics is still going on. There's going to be a huge year for politics. We're going to see who makes it into the next round of the French in the French election. And back here at home, don't miss this. On Friday, U.S. GDP numbers are coming out. We'll keep an eye on that one. The first major economic report under President Trump. It still counts for
yes,
Obama,
it does.
I think.
Absolutely. That's all for What You Missed. Thanks so much for watching.
Have a great weekend. This is Bloomberg.
Thank you. God bless America.